Hello, everyone. I hope you can see and hear me. It's a pleasure for me to introduce you to a wonderful panel of researchers and executives who are going to discuss open banking together with me. So without further ado, let me get started. The topic of today, which is the first webinar of our Oxford Future of Finance and Technology initiative, is open banking and the changing nature of competition. Here is the team. I am Pinar Özkan. I'm a professor of entrepreneurship and innovation, and I'm also the academic director of the Oxford Future of Finance and Technology initiative. And today with me are two of my brilliant researchers, Andres Sunea, who is a research fellow funded by Ripple, and Dize Dinçkol, who is the research fellow, postdoctoral research for the Center of Corporate Reputation. And we also are delighted to have Ajay Bala, who is the president of Cyber and Intelligence at MasterCard and an executive in residence at our school, Said Business School. Welcome all. It's a pleasure to have you. What we're going to do today is we're going to be talking about two particular aspects of open banking, which is going to be fresh out of the oven research findings for you, which haven't been published anywhere yet. So hopefully you'll enjoy them. And we'll have Ajay join us to make sense out of what we're finding and how that matters and whether it matters. But before we get into all of that, let me quickly introduce you both to the initiative that where this research takes place, as well as the topic of open banking itself. As I said, the initiative that we're all part of is the Oxford Future of Finance and Technology initiative. And this is an initiative where we're trying to understand the role of technology and the way that it transforms the financial industry. In particular, topics that are dear to our heart and center of our research are financial wellness, AI in finance, and open banking. And today, as you know, we'll be talking about open banking, but we'll talk actually tangentially about financial wellness and AI as well, because these topics are very much intertwined when you start to think about the way that technology is impacting the industry. On our website, which you can easily Google and find, we have research findings, case studies. We have just started a female founders and fintech case studies where we have free cases for you to download and read, as well as news from research that is being published or that is actually being talked about in the media. So feel free to visit and feel free to reach out to us in order to participate and learn more. Now, without further ado, let me tell you a little bit about what we mean by open banking and why it matters. And after giving a very quick definition, I'll invite Ajay to join me in a short discussion in why, from his perspective, this matters and why we should talk about open banking. So open banking can really be thought about as a way to access customer data. And as you know, finance is an industry that is highly data intensive, which means that in order to innovate, you need to have access to data. And this has been a problem in the industry for new entrants for decades. Large institutions have been sitting on top of data, which hasn't been accessible for new entrants. And without meaningful access to this data, it has always been difficult for new entrants to really provide any competition to the existing players, which makes the industry less innovative and more stale. And so that was the starting point of regulators trying to figure out what they can do in order to boost innovation and competition in finance. And the open banking regulation, which is called PSD2 in Europe, but also is happening, as Andra will tell you, across the world, is a new way for new entrants to, or third parties in general, to access customer data. If I were to ask you, anyone who is in the webinar, if I were to ask you, how do you access your financial data? You would probably tell me that you either go to the mobile app of your bank or to their website, which is the left part of the picture that you see in front of you. So that means that as customers in that green kind of band above, you use proprietary apps to access the data that is in the bank. But that means that only you can access it and you can't really necessarily meaningfully take it out and share it anywhere. Open banking changes that. And what it does is it says, look, you can still access the data that way, but you can also give access to third parties in a secure way in order for them to access your data, such that they can analyze that data, use machine learning models in order to innovate and try to tell you whether you can get a better mortgage, whether you're spending too much on coffee, or also if you're an SME, to basically budget and organize your spending, do your taxes, and all sorts of interesting outcomes start to emerge. And so that is what we're talking about. Imagine customer data being a kind of electricity on a wall, and open banking basically gives third parties that you trust the socket, the plug that fits into the socket in order for electricity to flow out of there and to be used for innovative services. So with that, I'd love to invite Ajay to join me to make sense out of why this matters. And Ajay, if I may, welcome first of all to our webinar. And I'd love to start by asking you, what is the significance of open banking for you with your hat on as MasterCard?
Pinar, good to see you. Thank you for inviting me. And I think you articulated it very, very well. Open banking is like, I would say, a revolution in the data space. And you got to look at the environment which is there today. We've got the kind of data that consumers, corporations, financial institutions are generating is multifold of what we used to see before. Now, that data, which, like you said before, is now very easily deployable because of open banking. And that can change consumers' lives, that can change SMEs and business opportunities. And of course, it brings new opportunities for financial institutions. Now, if you were to look at it very, very simplistically, if you can have all your accounts in one space and you can give access to all those accounts to another entity through a very secure consent-based system, it can give you valuable insights into your money. It can, get you new value propositions from new startups that are coming in. So in my view, this is like, I always say, it's like democratization of data is going to completely open up the financial services industry. And visualize as a consumer, if you had to apply for a loan or a mortgage or anything in the past, you had to get all your information. You had to then figure a way to get it to the new entity. The new entity where you were applying to had to then process all that information, check whether it is authentic. All that just goes away, because at the click of a button, you can consent to share that information, and that can go in a very secure way to the new organization you're dealing with. So I think what it can bring, the opportunities are immense. And I think we are just like, we are at the tip of the iceberg. We're just seeing the start of it, and visualize where it could take us 5 years or 10 years from now.
Fantastic. Thank you so much, Ajay. And in fact, you're absolutely right. We're at the very beginning. And in fact, our two researchers will talk about how we are seeing different models emerging and what challenges might be in terms of the implementation of open banking. Maybe before we get into that, one thing that I would love to mention is how this is, in a sense, the first step towards a future where data sharing will happen at a much wider scale. And of course, what we're talking about are iterations of open banking. The next level from open banking would be open finance. And the difference between the two is that open banking is just about the current accounts or checking accounts, meaning the payments that are being made into the account and that are going out of the account. However, several regulators around the world have announced that this will not just stay within finance, and we will use these kinds of schemes across different industries in order to make data interoperable across industries, such that your transportation, energy, healthcare, and finance data, you will have control over it, and you will be able to give access to third parties which also means that there will be competition across industries, not just within industry with this kind of access to data. Jay, maybe if I can ask you what this signifies for a financial institution. Imagine a world where we're looking into the opening up of data across industries. What does this mean for you?
So I think if you were to look at from a financial industry perspective, I think it just opens a whole plethora of new opportunities which did not exist. And as you rightly pointed out, the regulation has started out by talking about bank accounts and by talking about payments use cases. But the number of use cases which you can do are plenty. And you have to remember that in the world of today, everything is driven by data, anything. And by making this data available so easily through APIs and making it consent-based, so consumers control their own destiny, you are going to actually completely open up the financial service market. Now, I do think it's not going to happen tomorrow. It's going to take time, but it's all about being able to see the future. And what I'm really delighted with is that the regulators are embracing it. We are seeing this all over the world. We are seeing the startups and the financial services industry embracing it. We ourselves have embraced it in a big way. We have done 2 new acquisitions in this space. We acquired Finicity, which is based in the US, which is a very large open banking company. And then we acquired Aya in Europe too. So, the whole financial services industry is embracing it, which is what we need for any of these changes to actually bring change at a global scale.
Absolutely. And thank you for mentioning what you're doing in this space. I think that, in fact, without the involvement of large players, open banking cannot move forward. And that is a great example. Now, without further ado, thank you, Ajay, for your comments, and I'll get back to you in a few minutes. But what I would love to do next is to introduce our first researcher, Andra Sonea, who is a research fellow at the Said Business School, Oxford University, and her research is being funded by Ripple. And she brings a macro perspective to open banking, trying to understand like how it differs across different geographies, and in particular, what type of business models we see, particularly in the SME space. So over to Andra.
Thank you very much, Pinar. Thank you, Ajay. Thank you, everybody, for joining us today. In the little time we have at our disposal, I would like to tell you a bit about the most important things I found while researching open banking in these countries listed here on this slide. We didn't try to produce a ranking. We tried to understand how open banking is seen across these different geographies, because it really means different things in different countries. And I will explain in which way. And also, so let's start with this. There are many dimensions on which countries differ, and there are not two countries which are the same, not even in the EU, where the implementation was driven from the same directive. So for me, the drivers of this implementation are important and different, and we can find a spectrum from compliance-driven from a payment regulation, from consumer right regulation, or market-driven approaches to open banking. Probably the most interesting difference is the fact that when we talk about data and financial transactions, we don't mean the same thing across different geographies. So in EU and UK, we mean financial transactions from the current account only, because this is a payment directive and this is where the payments are initiated. In the regulation from Canada and Australia, we see many financial products included. It's true that they are not realized yet, they are not implemented yet, but that's the intention. And if we look at in Africa, this category of customers we are interested in, the SMEs, they don't even exist in the banking space. So their data lives with the telecoms, and still there is an open banking model appearing there, which lives on telecom data. There are the differences on payment initiation, if they're included or not, what type of APIs, if there are country level technical standards adopted or not, or even if other countries borrow or choose to implement the UK banking standard, which was an interesting finding across the globe. I would like to point you towards just a few business models that I found interesting. So first, when analyzing the companies which have been created and regulated in the EU, UK, and other countries, we realized that most of them address somehow this segment, which is growing everywhere, the segment of micro enterprises and SMEs, which is traditionally not served. And it's not served not only in the UK or some EU countries, but also across the globe. And there are reasons for that. I will not spend the time on that, but I would point you to the following model. So there are lots of companies trying to do credit decisioning or lending or both. Then a combination of banking and accounting, addressing the financial management needs of SMEs, and lots of models and super interesting models about payment initiations and the way of attracting customers towards various new payment methods. I would point you towards the difference between just two models. So if we look at Uncapped, it's a small or relatively small startup in UK, and they do revenue-based lending for particularly SMEs which do e-commerce. It's a particular type of business because it's entirely data-driven, and open banking is part of that. At the opposite spectrum, we have a startup based in Kenya, CredRails. They really built the infrastructure for open banking, even if there is no regulation which mandates the open banking to happen. So for them, because they believe in this model and they think that there is a need to cover it, they also build models for tools for SMEs to do their financial management, and in this way they become the repository of the financial history of these companies. So the opening of financial transactions goes in the other directions, not from the banks to startups, but from startups like this one towards banks, which is a very interesting model. Both of them enable or make things better for SME. In conclusion, even if probably I would speak a day on all things I find, I would just point you towards what surprised me. It surprised me how important the history or the starting point was in each country for how the open banking has developed. I realized that in order to understand the new ecosystems of new business models in each of these geographies, you have to understand the local problems because they are trying to solve local problems. And also I found that this class, if you want, or category of customers, micro and small enterprises, it's growing everywhere. And there is an entire ecosystem which sometimes has similarities across the globe, which tries to address their needs with technology. And last but not least, the study is still ongoing. So if you want to talk with us, I would be very, very happy to hear from you. And Pinar, I give back to you the microphone and look forward to the questions.
Thank you so much, Andra, for this short and effective presentation. I would love to invite Ajay to join you, Andra, in order to discuss some of the reflections that he might have on the findings so far, on the macro level view of open banking. Ajay, the floor is yours.
Thanks, Pinar. And Andra, you did a great job in articulating the way open banking is shaping up in the world. And I think it's actually very, very interesting. And in fact, Pinar, you had a line in your slide because generally you always see regulations come later. right? In all the stuff that we see, even in the crypto world, the regulators are talking about it while the industry's become already so big. Whereas in the open banking space, the regulators have actually taken a very proactive role. And it's very interesting how it's shaping up. So it's shaping up with regulation in some countries, which is to me a surprise because, as I said earlier, it's normally always, you have industry doing things and then regulation come. The second bit is a lot of innovation is happening with startup capital. So startup are mushrooming all over the world. I spoke of 2 companies which we acquired earlier, but there are several other companies all over the world, which are using this innovation in data and open banking to set up platforms. And the third piece which we are seeing, which is also very interesting, is that we are seeing the industry collaborate with each other. Because you got to remember, if there is a regulation, then there is a seamless way to start it. Because then you say, okay, hey, you need consent from consumers. You need security to be shared in this way. But we are actually seeing that in countries where there is no regulation, that industry is collaborating with each other to say, let's combine, but let's do it in a bit of a structured and an organized way. And that's working very, very well. And lastly, I would say what is very, very interesting, and you heard a bit of that from Endra, is that the way regulators visualized open banking, which was with the payments use case and current account use case, is actually changing to a variety of use cases. And I actually think as regulation is formulated in the future, it's going to move away from just open banking of bank accounts and payment use cases to open data, because it's really about data. And that data, as long as you have access to data which is secure and consent-based, can be used to do a lot of things. So I think this place is evolved. I do know from my own experiences with SMEs I've spoken to, that it has changed their lives. And Endra mentioned it briefly, but I know of a coffee chain owner who was having a tough time accessing working capital. And, by the use of open banking and by the use of connecting to one of these lending platforms, he was able to share the banking data, all his details of, transactions, etc., with the lender, seamlessly, fast, and was able to get working capital approvals very, very quickly. And I think that's what we're going to see more and more, especially in the SME space, where it is very, very hard to get working capital. And if you throw in lending platforms, you throw in open banking platforms, and you bring in financial services industry, if you combine all of them, I think the lives of SMEs will become much more simpler and better.
Fantastic. Thank you so much, Ajay. Andra, any comments, any questions for Ajay based on your research? This is a great opportunity also for us as researchers to exchange ideas.
So what was very interesting and important for me was to distance myself from my let's say Western-centric view. I spent so much time and years implementing open banking here in the UK, and I had to really open my mind to see how people develop a very similar concept, how you can satisfy financial needs which are unmet based on data, but in certain environments where the regulator doesn't even discuss open banking as a concept, and still it's happening. So if you look at it, I'm fascinated by the models that I find in Nigeria, in Kenya, in Pakistan, and I think we have a lot to learn from them, because they managed to build things infrastructure-like that can be deployed in other countries, or they are built with this in mind, because no country is big, or no market is big enough at the moment in a monetary value, I mean, to make sense for the company to stay just there. And really to deliver at that particular cost in order to be able to give £10 loans, that's something that we should learn, because we cannot do this yet, you know. So that was the big discovery for me. What models people deliver there in response to the same problems that we have here. And another point would be the commonality of problems. And you wouldn't think what the commonality between the financial needs of an SME in Africa and in the UK, and it's the last mile, which is a very difficult part to deliver. But that would be another discussion. I think this is what was very surprising, and how many things are in common and how much we can learn from other countries.
Yeah. So Andra raises a very important point. You know, when we discuss many of these new innovative things, we, you know, paint it with one brush, and the world is not one painting. It's very, very different, and different countries are in different stages of market development. And in my experience, frankly, innovation like this sometimes actually helps many countries which are in a different stages of development, which are behind in the curve. They actually can leapfrog. We saw that, you know, when mobile phones came. We are seeing that in all the, you know, internet speeds. You know, the way internet technology is developing in a very different way, and many of these markets are actually leapfrogging. So I think here is an opportunity where, again, I think many of these emerging markets where we do not have a lot of structure of sharing data, actually they may leapfrog, because there is consumer need, there is SME need, there is financial services need. And I think many of these countries are based on solving the needs of these various constituents and stakeholders. And because there are innovators there, we're going to put in capital to solve these needs. I think we will actually see that it'll develop very, very well in various parts of the world. And you know, you gave some excellent examples in Kenya and Nigeria, and we are seeing that in many other parts of the world. Finally, I do think that this is a revolution in the making from a data perspective. And I do think we need to spend more time as an industry thinking of how do we actually pace this development so it is done in a structured and organized way, because that's when it will actually help everyone.
Fantastic. Thank you both. This is so eye-opening. And also thank you so much, Andra, for sharing kind of what was surprising for you, because in fact, what we can learn from developing countries in the way that they build infrastructures without the help of regulation is something very valuable. Now, in fact, I think this is a great segue to Dize's research, because she's been looking at the implementation of open banking in the UK, and she has found several interesting aspects of how implementation may not have gone as planned, and how that had implications for the industry structure and for competitiveness in finance. So without further ado, over to Dize.
Thank you, Pinar. And hello, everyone. I will also share some of the findings from our research, and especially from this project where we looked at how open banking regulatory standards impacted the industry architecture of the UK banking. And first, I'll start by talking about some of the challenges that we observed. The first one was the limited scope of the regulations. So the regulators made a choice here to limit the scope of regulations initially to current accounts and payments data. And this was basically to have a more controlled approach to the rollout of this new technology and this new approach of doing things. And this decision left out some of the other types of data, such as investment data, savings data, pensions data, etc. And although this was a helpful logic to test and learn along the way, this has caused some challenges for the existing players in the industry. For example, there were already fintechs in the industry providing services using these other types of data as well. And this limited scope of the regulations made it difficult for them to keep providing their services. So they needed to use different data access technologies to access different kinds of data, which led to confusion for the fintechs as well as the customers using these different customer journeys to basically access their different data. And this also has led to uncertainties about when it would be best to switch technologies, because the APIs initially were not resilient enough for these fintechs to keep providing their services in a frictionless way. So there were questions about when it would be best to switch technologies from the old ones to the new open API technology. Another challenge was what we call the curse of interoperability, and this was from the perspective of banks. Most of the banks wanted to be the primary bank of their customers, and interoperability made this different for them, made this different to achieve. And this reduced their incentives to adopt these open APIs, and this was true both for incumbent banks as well as challenger banks. And this lack of aligned incentives made it difficult for them to adopt the standard APIs, and basically, as a result, the implementation of the standard open APIs was different across all these different kinds of providers in the UK banking. So overall, this slowed down the adoption of open APIs and the standardization in the industry, and which required a hands-on approach from the regulators. For example, due to the variance in, for example, strong customer authentication journeys of these providers, the regulator needed to step in and extend the scope of regulations to include standards for strong customer authentication and user experiences. So overall, we observed that there was this push for open banking, but lack of standardization in the industry, which led to new bottlenecks in the industry's interoperability. And this basically allowed way for these new players emerging in the industry, which are called API aggregators. And this meant that these players were resolving this bottleneck by aggregating different kinds of APIs and different kinds of data access technologies to provide a single API in the industry. And these players were a key player in the architecture of open banking because they ensured the connectivity. And basically, this is an advantageous position because there was this huge volume of data going through these players' systems, and this allowed them to develop data analytics capabilities and AI capabilities. And by deriving insights from this data, they were able to develop better targeted, more innovative products. And this role that has become as a technical role evolved into something more strategic, ensuring the connectivity at the national as well as global level. By facilitating, we can go to the next one, Pinar. By facilitating these global connections, they basically gave way to new innovative competitive applications. For example, they were able to introduce embedded finance applications where non-finance providers could integrate the services from financial service providers into their systems. For example, this Klarna can be an example for this, where they offered microloans at the checkout of merchants, for example. And these services, as I said, ensured global connections, and they were unbounded by industries or geographies. So this was also a cross-industry application, not limited to only banking industry. And basically, this strategic position illustrated how these players were becoming an emerging competition to a wide range of incumbent players across different industries, including financial services. Thank you very much. Looking forward to hearing comments and thoughts from Ece.
So Liz, you did a great job in summarizing your research, and you obviously had a very interesting experience doing this research. And I'd just like to highlight some of the very valuable points that you raised. That, you know, when we talk about open banking, it's not all a picture of just roses and, you know, lovely things. There are a lot of challenges it faces today and it will face as it evolves. But it's no different from any other technology that develops. It takes time. There are issues, and then the industry comes together or regulation comes together, and that helps in gathering and accelerating that particular trend. And I just highlight three things which stand out for me. And I think they pretty much came out from in your research too, that the industry is evolving differently in different parts of the world. And one of the things which is lacking is standardization. And yes, in countries where there is a regulation, yes, you can standardize it, but no regulation will ever be able to address everything. So you do need collaboration in the industry. You need some kind of a agreement to say, these are the standards that we should follow for open banking. That standards can be about API, it can be about how data will be shared, it can be about what kind of terms and conditions should be disclosed when you take consent. But there has to be some kind of a standards organization which needs to come together on this. The second piece, I think, is trust. And here I will say the kind of security which is used, the kind of data practices and where, how the data is being shared, is used, how consent is taken is extremely important. Because there is nothing else which can damage this entire trend other than a problem in any of these areas. If that happens in any country, any market, it will really shake up consumer confidence. It will shake up regulatory confidence. And then it'll stifle the growth of something which can really help society and the world, right? And the third piece I would say is experience. Ultimately, these things will do well if consumers can benefit from it, if financial services industry can benefit from it, if SMEs can benefit from it. And if they don't benefit from it, it is never going to take off. It will just remain like a concept. And it looks like it's benefiting. That's why we are seeing it take off in many countries. And you mentioned valuations of some companies with such huge numbers. It's happening because there is a value proposition, and that value proposition is working. But as we think about it as an industry, I do think we need to keep the stakeholders in mind and their value proposition. So consumers have to benefit. Financial services have to benefit. SMEs have to benefit, because that is what is going to create a business model which will do well. And the points that I highlighted before will actually help. The standardization and the efforts on trust will actually help reinforce that confidence with our stakeholders. So I think that's what I would say in summary. I really enjoyed your research presentations.
Thank you so much, Ajay. And in fact, one of the things that I find fascinating about the findings coming from DZ's research is the way that these API aggregators, a purely technical role that was there to solve a bottleneck, technical bottleneck, ended up opening up the industry to players from outside the industry. And in a sense, it really accelerated the movement towards embedded finance. And I would love to get your views on that as well.
Yeah. So I think if you look at the future, it's very clear that the way we've done finance historically, the way we do it today, it's already changed in a very, very big way. Like, how many of us now actually go to a bank branch? So digital transformation is already happening in a big way. And I think if you now cast that ahead 5 to 10 years, what you do from your mobile devices, what you do from a technology basis, what you do in terms of sharing based on APIs, I think there is a whole new industry which is already evolving and will evolve as we look at in the future. And I think new businesses will arise out of that. And, I use that phrase, democratization of data earlier. And that democratization of data will only remain a phrase unless we can actually put the infrastructure around it, which is all these APIs. And that's how the role of API integrators came in. And in fact, one of the big things we looked at is when all of this development was happening, how do you actually make sure that when these API exchanges happen, that actually there are two secure parties exchanging it? Because that was a big question when open banking was being thought of in the early days, because anybody can come in. How do you actually put guardrails in place so that this is the correct API, this is the correct interface? How do we actually make sure that these APIs work smoothly? And I'm taking it to early days. Well, early days is not very far away. It's only like last 2-3 years. So it's evolved very, very fast. I'm glad to see that some of these new startups and new developments have happened, which is actually making sure that the path becomes smooth. Because as I said, it has to be secure. It has to be a great experience. Otherwise, no use case will take off. So I actually think to summarize to what you asked, Pinar, I think all the makings of a new evolution in this space is happening, because we are seeing regulations or industry coming together. We are seeing technology, startups, infrastructure come together. We are seeing standards, not maybe as organized as I would like, but it's happening. We're already seeing the early days where industry is coming together and saying, okay, let's do it in a certain way. So we are already seeing a ecosystem evolve on open banking. And we ourselves as MasterCard, as I said, we have invested heavily in it. We've done 2 acquisitions. We see we can play a major role, and we are working in many parts of the world with the industry, with the financial services industry, to ensure that this evolves in a way that it actually benefits all our stakeholders. So I think it's very exciting. I think the future is very, very promising in this space.
Thank you so much, Ajay. And this is a great moment for us to also open it to our webinar guests. And with that, let me just move forward to our Q&A section. And while we're going, Andra has been amazing answering a lot of the questions, and I'll ask her in a moment to maybe select 1 or 2 of the questions that she might want to highlight. But in the meantime, there's a great question for Ajay, actually, which is building on the question of API aggregators. Are actors like MasterCard or Visa actually evolving to become themselves API aggregators, Ajay?
So from our perspective, we look at the whole ecosystem. And we are a big player in the whole payments ecosystem. And from an ecosystem perspective, API is one piece. It is a very important piece. So we have invested very heavily in API technology, and all our investments in open banking is actually helping create this entire ecosystem. And frankly, as we evolve, we will need more technology developments, and we are very committed to help grow this entire open banking ecosystem.
Fantastic. Thank you so much. We have quite a few questions in the Q&A, and some of them have been answered, but they are worth highlighting. And in fact, I'd like to highlight myself one, and then I'll ask Andra maybe to choose 1 or 2, which she has put brief answers to, but they're worth considering. I'd like to highlight the one by Mikita Zabuga. And they're asking, are TPP fintechs rivals or partners of the bank? How do they find synergy? What can we as fintech offer them? And I'd love to get views also from my fellow researchers and Ajay, but I'll start maybe giving a few thoughts myself. Fintechs can be rivals to banks, and that is the nature, that's how competition works. Data being the most important resource in banking, in addition to trust with the customers, it means that open banking will allow data to be shared more freely, and that will mean that database innovation and database competition will increase. But Mikita, you're also absolutely right that there's synergy between them. There are win-win situations, because what fintechs lack is scale and resources, and what large institutions have are exactly that. And so ways in which they can collaborate, they can partner, will really push open banking forward and will be good for customers. Now, our research, which we didn't share today, also shows, this will be again in the webinar in June, we'll share a bit more research insights into how fintechs sometimes struggle to work with larger institutions because the cultures are so different, and even the timeline for onboarding a fintech might actually be so long because of all the checks that need to be done, that some fintechs are afraid of running out of money in the meantime. And so while the synergy and the potential for win-win is great, the topic of fintech bank partnership hasn't necessarily been one where we see all roses and kind of know the challenges. It's actually quite the opposite. It's difficult to get the formula right, but if you do get the formula right, then it can be really the best way to go forward, because the parties offer things that the other one really doesn't have. Ajay, any thoughts on that?
So I agree with you. I think it really opens up competition. But, you know, I have a little bit of a philosophical view of these things. Because if you look at some of these things from an ecosystem perspective, it actually forces rebalancing of industries to focus on their own core competencies. So, you know, when you open up data and the data can freely transport with proper consents and security, etc. I keep saying that because I think that that's really critical, because otherwise it'll just fall off the rails. But if you do it properly, do it the right way with consumers' consent, I think actually it will create pockets of core competencies. It will develop the industry more. And within financial services, you will see, you know, companies which will specialize on micro lending. You will see companies specialize on SME lending. That has already been happening for some time, but now you will support that with data, which means you can get decision-making on many of these things in a much faster way. So I just think it's such a boon for, you know, consumers, for SMEs, you know, who currently in many markets have to wait for months to get working capital loans. Whereas if this all opens up, yes, in early days, we could see this as competition, but I see this as is going to help everybody. And I also think that the industry has realized that, because in the early days, there was a lot of pushback. You know, I mean, and you'll remember that, Pinar. Nobody wanted to really, you know, share data just openly. People were worried. What is the consent mechanism? Will the data be secure? And will it create a lot of problems for the company which is sharing the data? Because they could lose a customer, right? And the way it's evolving is everybody is realizing that actually everyone can come out as a winner. And I think that's where open banking has a bright future.
Absolutely. And Ajay, thank you so much. And I completely share your view that this is forcing players to rethink their competitive advantage and understand what they have been doing, maybe that they shouldn't be doing, and what others should be doing, and how cooperation and innovation ecosystems may be the answer to some of the lack of innovation in finance in the past. So thank you very much for that. I'd love to turn it over to Andrea, because I know she's been quite prolific in looking at the questions, whether there are any questions that she'd like to highlight for us.
Yeah, there are a number of them, and I'll group them together somehow. So I think the questions around TPP or third-party providers, which are a special type of financial entity regulated according to PSD2, and it's a new type of entity. So I think what is not very obvious from for many is the fact that these entities do not need to have a commercial contract with the banks in order to connect to their APIs, which makes the model very powerful, because the banks cannot say, I don't want to work with you, or let me check, I don't know what. It's simply if a particular entity, startup or not startup, obtain the TPP status, which means they either can call the APIs for getting financial transactions, or that's one type of regulatory regime, or they can initiate payments from their application directly from the current account of the bank. They can do that. The banks cannot say, I don't let you. So if people are concerned about collaboration or cooperation, this is how it works. The model of integration or calling these APIs in Europe, and actually in UK as well, because it was developed on the same model, functions in this way. Where the difference is, however, or where the banks can make it difficult, but I don't think they do at the moment. It's in the quality of data they provide, in the reliability of the APIs. Do I call these APIs and they are down? Do I call these APIs and the data they give me, it's so poor that I cannot really use it? It's lacking context, and so on. So there are situations like that. And I have to say that in the UK, we take this a bit further. So there is an intention to make it easier in terms of authenticating third parties, because now they have to request the customer re-authentication every 90 days, and there is a lot of customer attrition because of that. So this is planned to be removed in, I think, somewhere in September in the UK. That's not the case in the EU. So there is a lot happening on this model. Yeah.
Thank you, Andra. And in fact, I think this is a great moment maybe to also bring Dize in, because Dize, I know that your research has also shown some implications of the, let's say, broken or kind of imperfect APIs and how that affects fintechs that are using them towards the customer. It creates trust issues, I believe. Would you like to quickly elaborate on that before
Exactly.
Yeah.
Sure. Thank you very much. So yeah, there were these issues, as Andra mentioned, with the technical reliability of these APIs. So first, there is this variance, as I briefly mentioned in the presentation. So although there was this standard APIs introduced by the regulation, all banks' implementation was different. So as our fintech informants put it, like connecting to one bank meant connecting to one bank, not all banks in the UK. So first there was this issue, and second, there was the issue of resilience of these APIs. And when you are as a consumer using this fintech service and you cannot connect your bank account to the service, you blame the fintech. And this basically puts the blame on the fintech when the bank APIs doesn't work. And it also impacted, as Pinars put, the trust to these fintechs, which was already a challenge that they needed to overcome to get the customers to trust them.
Thank you so much, Dize. In fact, that was one of the challenges that we saw fintech struggling with the most, and regarding open banking. When it doesn't work, it looks very much like it's their fault, whereas it may not.
And we've heard like the consumers sometimes needed to try 17 times to connect their bank accounts. So this was a real problem.
Yes, it was interesting to relive those challenges with them, in fact. Thank you, Dize. I'd love to direct the last question to Ajay, because I think it very much is within his territory. The question is from Ravindra Meshram, and he's asking, what implications are expected on financial frauds when the consumers are not very well aware of what they're consenting for? So it's a little bit about security, but in general about financial fraud in the world of open banking. Would love to get your thoughts, Ajay.
Yeah. That's a great question. And it is my favorite topic, because I do think that ultimately we all work for a consumer. And if we don't protect consumers, there is no business. So I think from a open banking perspective, this was the biggest issue which actually stopped progress, because the whole issue was, how do you actually take a consent? How do you define consent? How do we actually make sure that consumers are educated enough to know what they're sharing, and then be educated enough to know who they are sharing with? And then finally, when they share this information with somebody, how do we make sure that that information is used for that purpose and is not used for something else? So there were all these questions, and that's the reason, frankly, I was really pleased when regulations started happening, because regulations can help address many of these issues. And yes, a voluntary code, a standard with the industry helps, but protecting of consumers, I think, can be very quickly addressed with regulation in this. And Europe actually has taken a, as we all know, has taken several steps to do this on data. And sharing of data, consent on data, how you store data, etc. They've already made progress, and rest of the world has also now made changes on data policies and sharing of data policies. So as we look at open banking, it really is those same policies which we got to apply to open banking. That a consumer owns their data. You want to use their data, you have to take their consent. And you have to very clearly lay out what that data is going to be used for. And I think there are very good guidelines available in several markets where regulation has happened, which is very clear, which can be a template for many other countries. They can also be a template for countries where there is no regulation, but the industry can adopt and embrace them. We are already seeing that. And overall, the progress is happening in the right direction. It does not mean that, again, it does not mean that everything has happened and everything is perfect and it's in place. We do need to keep a very tight eye. We need to monitor, and regulators, I think, need to play a big role here, so that as these development happens, the regulations can keep pace with it, to make sure that they protect consumers, they protect their data, they make sure that the data is secure, it's stored properly, it's used properly, and all those things about data. Lastly, I just say, and I think we've heard this from the research. You mentioned this, I used the word earlier. Ultimately, for something to be successful, as big as open banking, you need trust. And trust means you got to make sure that your stakeholders, and I would say consumers, in a big way, trust what you do. And it starts with making sure that their information is safe, secure, and used with their consent. I think that's the fundamental tenet we follow as a company. And I'm glad that regulatory intervention in many markets is actually ensuring that that becomes a common practice around the world, because that is key to success. We got to protect consumers. We got to make sure that they are the ones who are really taken care of for ensuring that open banking is successful for the future.
Thank you so much, Ajay. This is a great way to conclude the webinar. I'll just take a moment to thank all of you, Dize, Andra, and Ajay, for your amazing contributions. It's a true pleasure to work with you. And for everyone who have joined, please feel free to keep in touch with us. We do update our website, and we also build courses based on some of these findings from the research. And we would love to hear from you, and we would love to keep in touch with you, both in terms of learning and in terms of collaboration in the research. And if you want to find out more, get back in touch with us. And otherwise, we look forward to seeing you again, hopefully in June, where we will be discussing data-driven innovation in finance. And our guest speaker will be Steve Suarez from HSBC. Thank you again, and have a good rest of the day.
Thank you, Pinar. Thank you all.
Thank you.
Bye for now.